I think there is clearly case building up for a rate cut, including expectations. But I think more important than rate cuts would be the broader interest rates in the economy beyond the signaling of the policy rate, which is the lending rates by the banks. And that is also driven by what's happening to the liquid environment. So in that context, the CRR cut was quite interesting and welcome. And that, in a way, has set the tone. So what we would be looking for beyond the headline rate cut, that matters. It's important for signaling, it's important for sentiment, but also the RBI stance on broader liquidity environment, including what it does around credit policy, what it does around, or what its stance is around the LDR ratios, how conservative it is, or how relaxed it is about freeing that up from a policy perspective.
Got it. Gautam, what about the banks in India? How do you think they would fare given the credit deposit gap narrowing, but you still haven't seen credit impulse come back in a big way, and deposit growth, deposit mobilization is still very much an active theme?
Yeah. So look, we don't look at deposit mobilization in isolation. In a way, it's linked to the credit growth. So there is that interlinkage happening between the two. I think the bigger issue is the credit demand. Also, pockets of economy where there has been slowdown or issues around NPLs, like the microfinance or unsecured part, how that bottoms out and starts recovering. So that will matter. But as a sector overall, from the equity markets perspective, we are neutral on the space from a strategy perspective, but we do see select opportunities. Like very simplistically, if you look at the large private sector banks in India, they are, in an Indian relative context, fairly quite attractive risk reward versus history, versus where the rest of the market is, and they're still growing, right? And they still have very strong franchises.